Hey folks, Martin and Mike here with our video blog episode number 2, and today we're very pleased to interview our loan officer Edwin Davidian. In fact, he was ranked top 100 loan officers in the entire United States. You're 91, right?
Absolutely.
Congratulations, that's awesome.
Thank you.
So thank you for interviewing with us.
My pleasure. Thank you for having us on your video episode number 2.
Thank you. So Edwin, let's talk about if someone wants to buy a home, what's the first step they should consider?
I think the first step is to get a solid pre-approval because with a pre-approval, basically the borrower will find out exactly what they can qualify for. And once they have a solid pre-approval, you gentlemen could put a very solid offer, and sometimes without a loan contingency.
Wow. That's good. Actually, in the past, we've been in multiple offer situations where our buyer won the bid because Edwin Davidian's pre-approval stood out versus the competition. So you have a great reputation in the community.
Thank you guys. So, and you know why? Because we work hard to give the borrowers a solid pre-approval, and our pre-approval is basically we need to find out their credit score, and not only the credit score, what are their liabilities, and if they had in the past, did they have any derogatory credits, derogatory matters on their credit report. Mm-hmm. So that's when the credit. The second, we need to find out about their income. What is their income? Do they have? Are they self-employed borrowers? If they're W-2, commissions, so on and so forth, and also, the third category is the assets. How much assets do they have in their account, and what are the down payment required? So they have to put. So these are the 3 categories that information that we need to give a solid pre-approval.
Okay.
Yeah.
So Edwin, tell us what are the latest program nowadays?
You know, I would say that's a great question, Martin. I would say not only do we have great programs, but if you compare from last year to this year, I truly think that the programs have relaxed a little bit. Why? Because, for example, now you can buy a $680,000 property, conventional loan, with 5% down.
Wow.
Okay? Wow. You can buy a $1.5 million property with 10% down. We didn't have those programs 2 years ago. We didn't even have those programs 6 months ago. So I would say the whole environment of lending has relaxed a little bit. But with a solid pre-approval, we can do that.
So do they still avoid the mortgage insurance with those programs?
Well, in order to avoid mortgage insurance, what we talk about is we do sometimes an 80-10-10 or an 80-15. What does that mean? They will give you an 80% first and a 10% second to avoid mortgage insurance. And we didn't have those programs 2 years ago. So that's important to have that. And also another program that I want to talk about, it's programs that what we call is for self-employed borrowers with 30% down, okay? We don't have to really look into their tax returns, so no tax returns are required.
Wow.
Yeah.
No. Surprising, huh?
Absolutely.
How many people we have for that program?
Yeah. So no tax returns are required. It's basically 30% down with 2 months of bank statements. Wow. They have to be self-employed, and we can do loans for investment properties and owner-occupied up to $1.5 million. So we have an array of programs, but basically what it takes is the solid pre-approval for the borrowers to come in, and we can figure out exactly what program will suit their situation.
Very nice. Very nice. And what are some of the do's and don'ts if someone wants to buy a home? They should be.
Yeah, that's really a great question, Mike. The do's and don'ts of buying a property. You know, when somebody wants to buy a property, they shouldn't go on a lavish, great vacation to Europe, okay, or to buy a new car. Or
put
maybe put it on credit, because what happens is their monthly liability increases, and even though the environment of getting loans have relaxed a little bit, but we still have the debt to income ratios that they can't have too much debt, right? So so that's that, and also one of the key factors is do not change jobs a month before you want to buy a house or while you're escrow you want to buy a house, okay? And also they have to be really cognizant of the fact that they shouldn't deposit cash in their bank accounts either, because every money that they deposit in their banks, they need to be traced. Okay, so those are the do's and don'ts of buying a house.
Thank you, Edwin. We hope you enjoyed this episode. Edwin is our go-to guy with loans. His background actually is a CPA, so he's very knowledgeable. What's your phone number in case someone wants to reach out to you?
Sure, my phone number, guys, it's 818-844-8219 is my office. And my cell 724. It's I'm on 724 818-585-8283. Thanks again, guys.
Thank you.
Thank you.
See you in the next episode. Take care.
Take care.